All right, so let's move on. Now, when we're taking a look at bad debt expense using the allowance method, again, I mentioned about estimating bad debt expense, about using maybe past history, past company history. Maybe you're going to estimate it on a certain percentage. Again, the other industry that they operate in, what's the industry standard out there? And there could be other things, but really those two up above, the past experience and the industry in which they operate, this is how I used to estimate bad debt expense also, using those two, using past company history or the industry average. Now, there's three methods of estimating bad debt expense and using the allowance method. Now, we're going to take a look at percent of sales, percent of receivables, and the aging of receivables. Now, percent of sales, the first two out there, you could definitely use if you're probably a new company. The aging of accounts receivable is a better measurement of uncollectible bad debt accounts. With the aging of accounts receivable on this one, you're actually measuring and getting a good handle on how well you're going to collect your accounts receivable. Now, the theory behind the aging of receivable is this. The longer you have money being held out there, the less likely that you're going to get it paid back. So if you've ever loaned money to somebody and they haven't, and you've waited months and months and months, the likelihood that they're going to pay you back is probably getting to be very low. And that's the theory behind the aging of accounts receivable method. The longer that the account is out there, the less likely you're going to be getting the cash. Now let's talk about the percent of sales method. Now, what we're going to do is compute bad debt expense as a percentage of net credit sales. Now notice here it's net credit sales. Now, sales revenue can be both cash and credit. What you just want to do is just on credit sales, because you're going to get 100% of cash. I like to use, if you're going to use this, I would definitely go as a percent of credit sales. Some companies use all sales, but if you're getting all your cash sales, why would you want to set aside an amount out there for cash sales? But again, I digress on that one. Now, in this case here, what past experience shows is Smart Touch has realized that 0.5% of credit sales are going to be uncollectible. Okay, so right now they've got net credit sales of $60,000. 0.5% of those are going to be uncollectible. So their bad debt expense is going to be net credit sales times the percent of uncollectible. In this case, is going to be $300. So they're going to make an entry out there as of December 31st to record bad debt expense. They're going to debit bad debt expense and credit the allowance for bad debt for $300. And again, this is the only time out here you're going to record this entry every time that you're doing sales every month or for every period or for whatever time period you're looking at, because you want to base that bad debt expense based on an estimate of the your percent of sales. So again, in this case here, you can post your entries up, and over here on the allowance for bad debt, again, we've got the allowance for bad debt is always going to be, there's only two transactions that are really going to affect the allowance for bad debt. Number one, you're going to have your write-offs. Write-offs are always a debit to the allowance for bad debt, and then any credits to the allowance for bad debt are going to be your bad debt expense. So this is a good T account here. So there's really only two things that are going to happen to the allowance. You're going to increase the allowance via bad debt expense, and you're going to decrease the allowance via account write-offs. So again, this is what's going to happen here when we look at the allowance for bad debt. Now, on the bad debt expense, that's only going to increase when you have the bad debt expense. Accounts receivable is always going to increase with credit sales, and it's always going to decrease with collections, cash collections. And then they're also going to decrease with any account write-offs. So again, very good theory to know on this one. So number 12, the following information is from the 2020 records of R&S Commercial Plumbing. So we've got some numbers here. We've got AR, we've got the allowance for bad debt as of December 31st, prior to the adjustment, okay? Net credit sales, we've got accounts written off during 2017 and cash sales. So bad debt is estimated to be estimated by the percent of sales method. So we're estimating that 3% of net credit sales will be uncollectible. Calculate the amount of bad debt expense for 2020. Well, let's take net credit sales of 180,000 times 3%. And that number should come out to a $5,400. And so that's how you measure bad debt expense using the percent of sales.